Stop refreshing the chart. Stop shouting into your pillow. Stop sending panic messages to your wife. What you are looking at right now on this third day of February 2026 is not a market. It is not an auction. It is not the result of supply and demand. What you are witnessing is a crime scene, and the blood on the floor is your generational wealth. I need you to listen to me very carefully because the window of opportunity to understand what just happened is being slammed shut by the very hands that control the global flow of money. The paradox is staring you right in the face, and yet the mainstream media is trying to gaslight you into insanity. Over the last 60 minutes, the paper price of silver has been hammered down 37%. Gold is down 18% in a vertical line that looks like the heart monitor of a dying man. But here is the impossible fact. Try to buy an ounce of physical silver right now. Go ahead, pick up the phone, open a browser. You can't. The primary mints have suspended all new orders. Costco's bullion portal is showing a 404 error. The major dealers have gone dark. If the price of a commodity drops nearly 40%, usually there is a surplus. But today, the supply is effectively zero. Does it make any sense to you that the price is cratering while the shelves are empty? No, it doesn't, because it's a trap. It is a sophisticated, high-frequency psychological operation designed to separate you from the only real insurance you have against the coming currency reset. While you were sleeping, a tectonic shift occurred in the heart of the financial machine. At 2:33 a.m. Eastern Time, a leaked internal liquidation manifest from a private clearinghouse I monitor hit a secure server. It confirms that the big boys moved $6 trillion in notional paper value in a single dark pool session. They dumped over 12,000 naked short contracts into a market that had no buyers, intentionally triggering every stop-loss order on the books. They are terrified that you might find out the truth before they can secure their own lifeboats. We are seeing the death throes of a system that has run out of physical metal. This crash was engineered for one reason: window dressing. The banks just finished their end-of-month reporting for January. They needed to perform a total scrub of their balance sheets. They had to wash the toxic debt off their books and suppress the price of the only assets that prove the dollar is a fraud. By crashing the paper price in the middle of the night, they can report to the regulators that their risk parity models are stable. It's a total lie. The green and red numbers you see on your screen are digital ghosts designed to keep the sheep calm while the physical vaults are being bled dry by the people who know exactly what is coming. Look at the digital blackout that hit just as the silver price bottomed out. JM Bullion, APMEX, SD Bullion, they all went into scheduled maintenance within minutes of each other. That wasn't a technical glitch. That was a coordinated circuit breaker. They couldn't afford to let you buy silver at $24 an ounce when they know the replacement cost from the mines is already over $50. The system is bifurcating. The paper price is a fiction for the masses, while the real-world price, the price you have to pay to actually hold the metal, is pushing $85 for silver and $4,000 for gold. The disconnect is total. I have verified through internal logistics logs that at the exact moment the screen showed $30, physical 1,000-ounce bars were being settled in private over-the-counter transactions for $55 plus a massive delivery premium. They are creating a two-tier market, one for the suckers watching the ticker and one for the insiders grabbing the metal. The evidence of this global crime is everywhere if you know where to look. I have sources inside the Perth Mint who have confirmed a total pause on wholesale orders. They are moving to a rationing system they call strategic allocation. If you aren't a sovereign government or a central bank, you aren't getting a bar. The U.S. Mint has done the same. They've suspended sales of the American Eagle and have quietly repriced their remaining backstock 86% higher than the spot price. They are telling you to your face that the spot price is a lie. Meanwhile, the drainage in the East is accelerating at a rate that should be headline news. Yesterday alone, 32 metric tons of physical gold were pulled out of the Shanghai Gold Exchange. The vaults in London and New York are being hollowed out to satisfy the demand in China and India. The BRICS nations have realized that the dollar is a weaponized debt instrument, and they are preparing for the reset. They are draining our vaults before we realize the game is over. One of the two mientes, the red screen on your computer or the empty vault in New York. I think you know which one it is. Let's talk about the industrial offtake, because this is the math that the bankers at Goldman Sachs are paid to ignore. My desk is currently covered in industrial reports from Tier 1 suppliers in South Korea. Samsung has quietly revised their silver requirements for the next generation of solid-state batteries. We are talking about 50 grams of silver per cell. If you scale that to their 2026 production projections, one company is now positioned to consume nearly 15% of the total global annual mining output. Now add Tesla. Now add the massive solar installations in the Gobi Desert that are consuming 20% more silver per watt than they did 3 years ago because of the move to N-type cells. The math is fundamentally, irrevocably broken. We are entering a structural deficit of over 280 million ounces per year, and the stockpiles used to bridge that gap for the last decade are gone. You cannot print silver out of thin air like the Fed prints those green pieces of paper they want you to believe are still valuable. The villain today is the same as it has been for a century, J.P. Morgan, but look at the institutional schizophrenia they are displaying right now. While their trading desk is dumping paper contracts to keep the price suppressed and trigger your panic, their internal research desk just published a classified note for their private wealth clients, the 1% of the 1%. That note predicts gold at $8,500 by Christmas. They are playing both sides. They smash the price to shake you out, to force you to sell your physical coins back to the system for pennies, so they can buy your metal before the real move begins. It is the ultimate shakeout. They want you to believe the crash is real so they can fulfill the massive industrial orders they've already committed to. Think about the military-industrial complex. A single Tomahawk missile contains nearly 500 ounces of silver. Every AI chip being produced by NVIDIA, every high-speed sensor in a SpaceX Starship, every guidance system requires silver. It is the most conductive element on the periodic table. There is no substitute. If NVIDIA can't get silver, the AI revolution stops. If the AI revolution stops, the stock market collapses. The entire global economy is now dependent on a metal that is being mined at a deficit and hoarded by the world's most powerful people. This is the end game. They've printed too much money, they've created too much debt, and they've lied about the supply for too long. The laws of physics are finally asserting themselves over the laws of the Federal Reserve. The banks will try to crash the price again tomorrow morning at the London Open. They will dump another billion ounces of paper silver into a market that doesn't have 100 million ounces of physical to back it up. It's a psychological operation. They want to see if you have the stomach to hold through a $3 dip while they are quietly buying every physical ounce they can find at the back door. Don't let them take your seat at the table. We are watching a massive transfer of wealth from the West to the East. The West sells paper. It plays a video game with infinite digital credits. The East buys physical. It takes the real prize. Every time you sell out of panic because the chart looks scary, you are donating your family's future to a whale in Singapore or a central bank in Beijing at a massive discount. The most damning piece of evidence is the lease rates. The rate to rent silver in the institutional market has just spiked to 39%. Do you understand what that means? It means there is no metal available for delivery. The big players are so desperate for physical bars that they are willing to pay 39% interest just to borrow an ounce of silver for a month. In a healthy market, that rate is less than 1%. The system is in a state of permanent backwardation. The music has stopped, and there are 12 people for every chair. You have two options today. You can be the victim who believes in the paper price and follows the herd off the cliff, or you can be the survivor who understands that in a world of infinite paper, the only thing that matters is the finite metal you hold in your hand. The $325 billion insider selling by people like Warren Buffett is proof that the snap has begun. They wouldn't use the exit door if they weren't desperate. They are trying to prevent a melt-up. A melt-up is when the shorts realize they can't cover and they start buying at any price. It creates a vertical line on the chart. That is what happened to nickel on the London Metal Exchange a few years ago. They had to cancel the trades to save the banks. They will try to do the same thing with silver. They will try to halt trading. They will try to change the rules. They will try to settle in cash. But you can't build a solar panel with a check. You can't build a missile with a digital credit. The industrial world needs the metal. I've been tracking the movement of silver from the Peruvian and Chilean mines. The ore grades are falling off a cliff. They are digging more earth to find less silver. The cost of production is skyrocketing because of diesel prices and labor unrest. The miners aren't investing in new projects because the paper price is too low to make them profitable. We are looking at a 10-year lead time to bring a new mine online. The supply is fixed, but the demand is exponential. This is a classic supply-demand squeeze that only ends one way: a massive, violent revaluation of the price. Don't listen to the propaganda. Look at the actions of the smart money. Look at the margin hikes. Look at the vault drainage. Look at the industrial offtake. Everything is pointing to a systemic failure of the paper silver market. We are in the final countdown. Tomorrow morning, when you see the price dip because of the margin calls, don't panic. Smile. It's the last gift they are going to give you before the rocket takes off. It's the last chance to get physical at these prices. The sheep are still worried about interest rate cuts. They are still watching the puppet show in D.C., hanging on every syllable that falls from Jerome Powell's lips like it's some kind of divine prophecy. They have no idea that while they are arguing over a 25 basis point move, the real wealth is being moved into physical metal by the very people telling them to buy the dip in overvalued tech stocks. These institutional giants are using the mainstream media to keep the masses distracted with CPI data and political theater while they back up the armored trucks to the side doors of the COMEX. Don't be a victim of their psychological warfare. Be a survivor. The math doesn't lie. no matter how much the bankers try to cook the books. We are looking at 820 million ounces of total annual mining supply versus a staggering 1.1 billion ounces of verified industrial and investment demand. You do the math. That is a 280 million ounce hole that cannot be filled by printing more paper contracts. The system is broken. The vaults are empty. The era of the real is here, and it is arriving with a vengeance. This is the most important message I've ever delivered because we are reaching the terminal phase of this manipulation. The insider selling is the smoking gun that proves the exchange is at a breaking point. They are trying to freeze the market because they can no longer control the price through standard wash trading and high-frequency algorithm dumping. This is a bank run on physical silver, and the doors are being locked from the inside. The CME group isn't raising margins to protect the market. They are raising them to protect the bullion banks that are caught in a massive naked short position they can never hope to cover. If you don't have your metal in your own physical possession right now, you may never get it. The physical disconnect is at an all-time high. The institutional price for a 1,000-ounce good delivery bar is already sitting at $55, while the screen at the bottom of your TV says $32. That gap is a massive pressure cooker, and when it finally blows, it will be a vertical upward move that will shock the world and leave the retail investor holding a bag of worthless paper. Don't let them take your seat at the table. They want you to get scared by the volatility they are manufacturing tonight. They want you to look at a $2 drop on a digital screen and panic sell your physical coins back into the system so they can replenish their depleted reserves. Hold your ground. Hold your metal. We are witnessing the death throes of the fiat paradigm. The greatest wealth transfer in history is unfolding right now, in the dark, in the middle of the night, while the world sleeps under the blanket of institutional lies. But you are awake. You have the delivery manifests, you have the internal memos, you have the truth. The industrial giants like Samsung and Tesla have already realized that silver is the new oil. They are no longer waiting for the COMEX to find the metal. They are signing direct-to-mine offtake agreements that bypass the exchange entirely. This is the end of the transparent market. When the Department of Defense realizes that the silver needed for every Tomahawk missile and every F-35 fighter jet has been cornered by a handful of tech billionaires, they will invoke the Defense Production Act. At that moment, silver will be classified as a strategic war metal, and the window for private acquisition will be welded shut. Now is the time to act. Now is the time to secure what is yours before the limit-up days begin, and the exchange goes dark for technical maintenance. The math is broken. The vaults are empty. The war has begun. Look at the silver-to-gold ratio. Historically, for 2,000 years, that ratio was 15-1. In the Earth's crust, it occurs at 8-1. Today, the paper market has it suppressed at 85-1. This is the greatest distortion in the history of finance. To return to its historical norm, silver doesn't just need to double. It needs to increase by a factor of 10. Silver is gold on steroids. It is the poor man's gold that is about to become the rich man's asset. When the price hits 50, the FOMO will kick in. The people who ignored you for years will suddenly be calling you, asking how to buy silver. By then, the premiums will be $25 an ounce. When it hits 100, the mainstream news will finally start reporting on the silver crisis. By then, there will be no silver left to buy. We are looking at a vertical move, a discontinuity in the price chart where it jumps from 40 to 80 over a weekend. The strategy is simple. Acquire, protect, wait. Don't look at the daily paper price. Look at your ounces. That is the only true measure of your wealth in the era of the real. They will try to shake you out. They will call you a conspiracy theorist. They will say silver is a dead asset. They said the same thing in 2008, right before it went from $9 to $49. This time, the fundamentals are 10 times stronger and the dollar is 10 times weaker. The price on your screen is a fiction. The volatility is a weapon. The shortage is absolute. We are witnessing the end of the paper paradigm and the violent return of the real. Don't let the banks win. Don't let the sheep drag you down with them. Secure your future while the window is still an inch open. Every H100 GPU requires specialized silver-based thermal interface material. If the supply chain breaks, the tech giants will cannibalize the retail market. They will use their influence to make it illegal for you to buy bullion while they secure their industrial needs. I've seen the manifests. I've seen the internal memos. The $325 billion cash out by Buffett is the first volley in the final battle for the physical. They are trying to force out the speculators so the institutions can take delivery of what is left. The Federal Reserve is in a corner. If they raise interest rates to save the dollar, they crash the banking system. If they lower rates to save the banks, they trigger hyperinflation. Either way, the only survivor is hard assets. Silver is the most undervalued asset on the planet today. It is more rare than gold in terms of available investment-grade metal above ground. Most of the gold ever mined is still here, in bars and jewelry. But most of the silver ever mined has been consumed by industry and thrown into landfills. It is a disappearing resource. And now, with the green energy revolution, we are trying to build a new world using a metal that is in a terminal supply deficit. Let's go deeper into the belly of the beast. While the mainstream analysts are debating the nuance of a jobs report, the actual clearinghouse data coming out of the Depository Trust and Clearing Corporation, the DTCC, is showing a massive surge and failed to deliver notices. These are the IOUs of the financial world. When a bank fails to deliver a contract, it's supposed to be a red flag. But in this rigged game, they simply roll the failure into a new synthetic position. However, as of 4 a.m. this morning, the volume of these failures has exceeded the total registered inventory of the London Bullion Market Association. They are literally out of excuses. I've spent 30 years watching the registered versus eligible categories on the COMEX. For the uninitiated, registered silver is the metal that has a warrant on it. It is ready to be shipped to a buyer. Eligible silver is just metal sitting in a vault that belongs to someone else. Historically, the banks have pointed to the massive piles of eligible silver to reassure the market that there is plenty of supply. But here is the bombshell. My sources inside the vaulting facilities in Delaware and New York are reporting that the eligible silver is being moved into private custody at an accelerating rate. It is being deregistered and locked away. This metal isn't going to another bank. It's being trucked to private industrial warehouses owned by tech conglomerates who aren't waiting for the spot price to reflect reality. They are paying 60% premiums just to get the bars in their hands right now. Think about the rehypothecation trap. This is the most dangerous part of the scam. When you buy silver through a standard brokerage account or a popular trading app, you aren't buying silver. You are buying a promise to be paid based on the price of silver. That promise is backed by a bullion bank that has likely sold that same ounce to 10, 20, or even 50 other people. It's a fractional reserve silver system. As long as only 10% of people want their metal, the system looks fine. But we have reached the tipping point. 40% of the current contract holders are demanding physical delivery this month. The banks are scrambling. They are leasing metal from the eligible accounts, your neighbors' accounts, to cover their short-term delivery failures. It's theft, plain and simple, and it's happening with the silent approval of the New York Fed. Watch the time and sales data on the COMEX during the Asian session tomorrow. You will see massive blocks of 5,000 contracts being traded back and forth between 2 or 3 primary dealer accounts in a matter of seconds. It's called wash trading. They are creating the illusion of high volume and price stability to discourage the retail longs. They are trying to manufacture a narrative that there is plenty of silver to go around. But then look at the warehouse receipts. They are vanishing. The physical metal is moving into allocated storage that cannot be touched by the shorts. The dam is about to burst, and the water is already over the top. I saw a memo from a major bullion bank in Zurich last week. It was marked for internal use only, level 4 clearance. It detailed a settlement priority list for physical silver in the event of a market discontinuity. Retail investors, the people buying 1-ounce Eagles and Maples, were at the very bottom of the list. At the top, central banks and the military-industrial complex. The banks are literally planning to default on their obligations to you to ensure that the systemically important entities stay solvent. They will try to settle your silver contract in fiat currency that is losing 10% of its purchasing power every month, while they keep the metal that is gaining 50% in value every week. This is why the rule, if you don't hold it, you don't own it, is the only law that matters in 2026. Let's talk about the CME clearinghouse and the nuclear option. In the futures market, you only have to put down a small fraction of the total contract value. It's called leverage. For decades, they encouraged you to use 20-to-1 or 50-to-1 leverage so they could wipe you out with a tiny move in the price. But now the leverage is working against the banks. The price is trying to go to the moon and they can't stop it. So what do? They change the rules in the middle of the night. By raising margins, they are effectively telling the market that if you want to stay in your long position, you need to cough up 4 times more cash by tomorrow morning. They know most retail traders don't have that kind of liquidity sitting around. They are being margin called into oblivion. And who is waiting on the other side of that trade to catch those contracts? The very banks that triggered the margin hike. It is a coordinated liquidity raid on the middle class. They are doing this because the Shanghai Gold Exchange is currently trading silver at a massive premium over New York. This is called an arbitrage opportunity, and it is the nightmare scenario for the Western banking cabal. If you can buy silver in New York for $32 and immediately sell it in Shanghai for $38, you are going to take delivery of every single ounce the COMEX has. This is exactly what is happening. The physical metal is flowing from the west to the east at an accelerating pace. The vaults in London and New York are being hollowed out to satisfy the demand in China and Russia. The BRICS nations have realized that the dollar is a dying debt instrument, and they are preparing for a new gold and silver-backed currency. They are draining our vaults while our leaders are distracted with cultural wars and puppet shows. The era of the paper dollar is over. We are entering the era of the real. The institutions are lying to you, the media is distracting you, and the clock is ticking. You have the data, you have the math, you know the players. Your neighbor thinks his retirement account is safe because the stock market is at an all-time high. He doesn't realize that the value of those stocks is being measured in a currency that is losing its physical backing in real time. When the liquidity crisis is officially confirmed by the mainstream press, which they are delaying to let the big boys finish their trades, there will be a limit-up move in silver that will last for days. You won't be able to buy it, the websites will be down, the coin shops will be empty. This is the most important message I've ever delivered because we are reaching the terminal phase of this manipulation. The insider selling is the smoking gun that proves the exchange is at a breaking point. We are looking at a total systemic failure of the pricing mechanism itself. When you see the CEOs of the primary dealers dumping their personal equity and moving into vaulted physical metal, the game is over. They are trying to freeze the market because they can no longer control the price through standard wash trading and high-frequency algorithm dumping. Those algorithms were designed for a world of infinite liquidity, but they are choking on the reality of zero supply. This is a bank run on physical silver, and the doors are being locked from the inside. The CME Group isn't raising margins to protect the market. They are raising them as a strategic weapon to protect the bullion banks that are caught in a massive naked short position they can never hope to cover. By hiking the cost to hold a position by 400% in a single session, they are forcing the little guy to liquidate, effectively handing those contracts back to the banks so they can close their shorts before the rocket takes off. It is an orchestrated heist of your position. If you don't have your metal in your own physical possession right now, you may never get it. The window to convert digital promises into physical reality is closing in real time. The physical disconnect is at an all-time high. The institutional price for a 1,000-ounce good delivery bar, the real price that Samsung, Tesla, and the Department of Defense are paying behind closed doors, is already sitting at $55, while the screen at the bottom of your TV says $32. That gap is a massive pressure cooker, a structural anomaly that cannot be sustained. When it finally blows, it won't be a gradual rise. It will be a vertical upward move, a gap up in price that will shock the world and leave the retail investor holding a bag of worthless paper. We are talking about a limit-up scenario that lasts for weeks, where no one is selling and everyone is begging for an ounce. Don't let them take your seat at the table. They want you to get scared by the volatility they are manufacturing tonight. They are using the hammer technique, dumping paper contracts during the low liquidity hours of the Asian session to make the chart look like a bloodbath. They want you to look at a $2 drop on a digital screen and panic sell your physical coins back into the system so they can replenish their depleted reserves. They are starving for your ounces. Every silver eagle you sell back to a dealer right now is being immediately diverted to an institutional vault. Hold your ground. Hold your metal. We are witnessing the death throes of the fiat paradigm. The era of the unallocated account is dead. The era of the rehypothecated ounce is over. The greatest wealth transfer in history is unfolding right now, in the dark, in the middle of the night, while the world sleeps under the blanket of institutional lies. The mainstream media will tell you everything is fine until the very second the vault doors are welded shut. But you are awake. You have the delivery manifests showing the drainage of the COMEX registered inventory. You have the internal memos from the clearinghouses. You have the truth. The paper burns. The metal remains. This is the moment where the line is drawn between the victims of the system and the survivors of the reset. Subscribe if you want to survive the greatest wealth transfer in history. I will give you the data they are trying to bury. I will show you the manifests they don't want you to see. I will track the armored trucks that the regulators pretend don't exist. The system is flatlining. The vaults are empty. Welcome to the era of the real. Don't blink.